Hi, my name is Grace Baroni, and welcome to Conversations with the ERC5. Today, I have as our guest Drew Townsend from Fairway Independent Mortgage Company. Welcome to the podcast, Drew.
Thank you for having me, Grace.
Super excited to have you here because real estate is what it is, and there's still so many people out there looking to downsize or first-time home buyers. So I'm thrilled that you were able to join us. And let's start off with you just sharing a little bit about yourself with the audience.
So I classify myself as a mortgage planner in that, I don't look at the mortgage as a singular event. I look at the whole financial picture. I would say from a personal aspect, I keep chickens and I keep bees. Maybe in another life I could be a homesteader is kind of the goal. Yeah.
When you had shared that, it was like, I got to learn more about Drew.
Yeah. That's for a much longer podcast if we get talking about that.
All right. So we'll focus on homeowners today, or future homeowners. When you look at mortgages, there's just so many things that arise in questions, right? There's different types of mortgages that can get you to where you need to go. How do you determine which way to direct a home buyer? What would be best for? Is it a VA, FHA, stuff like that?
Yeah. So, I always say there's no generic answers in the mortgage industry. So, in other words, the answer that might be great for one client might not be the same, right? So I have a lot of clients that approach me and they go, Uncle Larry said I should do this and this, right? And so it really starts off with a conversation with the client about what are your home ownership goals, right? Where do you stand right now? And what's the program that's going to help you most efficiently and effectively accomplish those goals, right?
Right.
And everybody's like a fingerprint, right? They're completely unique to themselves, right? Their credit history, their employment history, their earnings, right? It's completely unique to them. And so it's trying to look at all of those as a broad, look at all the trees for the forest and then be able to apply some loan templates, right? And discuss the pros and cons, right? At the end of the day, my job is just to educate the client. If I've done that, correctly, they'll feel comfortable being able to make a decision on picking a program. I don't leave them hanging. I give them, my 2 cents,
yes.
As an advisor, but, the goal is really to empower them with the knowledge to be able to determine which program is going to help them, accomplish their goals of home ownership.
Well, as I've gotten to know you, what I really like about the feedback that I have heard and some of the reviews are that if someone isn't a right fit for you, or if you feel they'll do better with another program or maybe going in another direction, that you're very straightforward and you offer them those options. And I think that is always someone I want to do business with because we are all unique individuals. And it's not always a one-size-fits-all. And I think that's so impressive that you take the time to really listen and to also help offer that direction. Yeah.
One of my favorite books is called Ninja Selling. And there's a line in there that says, if you stop selling and start solving problems, you'll have clients beating down the door to work with you, right? And that's kind of the goal, is not to strong-arm clients, but to really advise them the best way I possibly can.
And I love that. And you're so right. It's about solving problems.
Yeah.
Not making the sale, but helping an individual get to where they need to go. So I'm starting off, and it was a long time ago, 40-something years, but you used to get like letters of approval or letters of commitment. Is that something that's still done? Do you recommend doing that if I'm a first time or even a second time, maybe I'm downsizing, but I'm going into another area. So now, how much cash am I getting from this? What will take me there? Do I need one of those letters? What's the best way to start there?
Yeah. I'd say right off the bat, the first mistake and it's not really a mistake, but the first thing that most potential home buyers or home shoppers do is they start talking to the agent, right? And that's because everybody wants a home, nobody wants the mortgage, right? However, it's kind of, they go to step 2 and they need to come back to step 1, right? And step 1 is making sure that they qualify, right? That they know their options, that they know if there's things they need to do to improve their score or get into a better position to qualify for a better program, better rate, etc. That we put together that action plan, right? And I always say it's never too early to get informed. And so that's where, I have clients that are coming to me looking to buy in mid 2025, right? And they're like, should we start the process now? And I said, absolutely, because we want to start putting together a plan. If I can get you into a better program to accomplish your home ownership goals, we want to be able to start now, right? We don't want to be kind of behind the eight ball. So the pre-approval letter, especially in a very highly competitive market that we're in right now, multiple competing offers, buyers willing to do pretty much everything that they can legally do to get an offer accepted. One of the things that we do that's a little bit different than most is we pre-underwrite the income up front. And this allows us to issue a guaranteed pre-approval letter. So not only is the quality of the pre-approval letter stronger, giving our clients a competitive advantage, we are also advocating for the quality of that pre-approval letter and using our reputation to do it, right? So a lot of times we're getting on the phone with the listing agent, talking with them. If they don't know me or my reputation, we're going to be talking with them and telling them, hey, we've pre-underwritten the income, right? So we're minimizing the amount of variables up front that allows the agent, from the listing side, to advise their seller, hey, there's less that can potentially go wrong with this buyer, right? We can compete, every once in a while we even beat cash offers, and that's no small feat in this market. So
yeah, that's impressive. Well, and I think that's a good thing to start off with, because knowing myself, I probably would want my farm, and I want acreage because I want to do all these great things, and I set myself up for a price point that's here. And, what I can afford is probably over here.
Yep.
So that sounds like a great way to get started, right? I meet with you, you learn about what I need, what I can afford, and then you direct me on how to put a plan together.
Yeah. So we have 3 phases. So we have application, documentation, consultation. And so the first phase is just completing an online intake form. Takes maybe 8 to 10 minutes. The documentation phase is where we kind of torture you. We do it with a smile. But the goal is, once again, that guaranteed pre-approval letter that we're pre-underwriting. So it's getting all the documentation to back that up, right? And then the consultation is where I do a Zoom meeting with every one of my clients. We talk about forecasted market appreciation rates. There's 2 big questions in that meeting that I talk to them about. And the first one is, at what point does a payment become uncomfortable for you? Right? Because a lot of clients have, some clients are right on the money with it, but other clients have a very big misconception of what they think they're going to get in a home for the monthly payment, right? So we want to address that up front, because I don't like sticker shock for my clients, right? I want them to know 2 things when they're making an offer on a home. What is it going to cost them in a monthly payment, and what is it going to cost them in cash to close, right? Those are the 2 big numbers, potential home buyers want to know when they're making an offer. So, and I actually have another rule of thumb on that I think gives our clients a competitive advantage, and it's the $6 per thousand rule of thumb, right? So based on the prevailing rate range right now, for every $1,000 more or less, once I run the numbers on a specific property for them, for every $1,000 more or less that they make an offer on a home, changes their payment by about $6, right? So in other words, if the agent goes, hey, if you really want to get your offer accepted, be more competitive, we got to up the offer by $5 to $10,000. That sounds like a scary, especially for a first-time home buyer, that sounds really scary, right?
Sounded very scary to me, yes.
Yeah. So, but it equates to $30 to $60 a month, right? At $6 per thousand. So when you put it that way, I can make an argument if the home's not worth $30 to $60 a month more, we shouldn't be making an offer on it, right? So I think that allows our clients to understand the math up front, where in counter offers, right, they can get a little bit more aggressive because they know it's not the end of the world.
I like that.
Yeah.
It would help me out a whole lot. No, kind of thing. That's really a great service that you provide. I think we need that when we're all buying this dream home, and just kind of those little reality checks kind of thing. Are we following the right process? Are we headed in the right direction? Is this something we can afford? Because who wants to move into their dream home and, you're there a year and it's like, so this wasn't such a dream, and now we've got to get back out there again.
Yeah.
So thank you for all that you do to provide that kind of information and service to families. So now we come to another subject. How about refinancing? The market is crazy. And you're deciding, do I stay in my home or do I go out and buy that bigger home? Do I do the addition? Do you do all of that? And is the process pretty much the same? How does that work?
Yeah, so we do the refinancing. We can do renovations on the refinancing, right? We can, we do debt consolidation refinances, right? And we the numbers don't lie, right? And so we do, especially on debt consolidation refis, those are actually my favorite because I can show them that, I had a client that was going up in interest rate by 3%. It was a pretty big jump on their mortgage rate, right? But by eliminating debts, if they continue to make the same payment, right? They had 28 years left on their loan, but if they continue to make the same payments, right, they were going to pay their loan off in less than 15 years, right? And they were saving well over $1,000 a month, right, by doing it that way. So we show them like the blended rate, but from a timing aspect, right, somebody who's been holding off on trying to, upsize or resize, right, might be a good time for them. Or if they need to do renovations, we offer that program as well. There's conventional and FHA, programs where they can stay in the house, get money to not only refinance the loan, but include, the upgrades and improvements to it.
And you're there to offer them the same guidance.
Absolutely.
To decide whether or not this is the best option.
Yep.
Do I refinance? Do I go out and buy? Do I start all over again?
Yeah, and with rates pulling back as quickly as they have, as sharply as they have, we kind of had not predicted it, but projected it, right? Just based on the experts that we listen to. And so we were able to educate a lot of our clients, and we still are, on establishing a strike price for refinancing, right? Because we want to make sure that we're not setting them up to where they're going to be refinancing every 8 to 12 months, right?
Right.
And so it's just monitoring it to a level where when we get to a certain dollar amount in monthly savings, we're monitoring it for them. So it's not like, oh, hey, when you hear in the news that interest rates, have fallen, reach out to us. We send them a monthly real estate report digest that tracks the value of their home, their loan data. It identifies, at any point interest rates, drop, what they could potentially save. If they put extra principal payments down, there's a calculator that'll tell them how much they'll save in total interest and how many years they'll pay the loan off sooner. It allows, that's another unique feature that we do that a lot of lenders don't, is that Wealth Digest allows our clients to own their home at a high level. Because they're always making sure they have the most efficient, whether it's homeowners insurance. It tells you when you can eliminate PMI, when you have 20% equity, if you didn't put 20% down when you bought the home. So it's kind of life of loan savings monitoring for them. So it's really powerful.
That's terrific. See, this is why you have all those great reviews on your website, because I did go on the website and was just checking everything out. And I am so grateful to have you as part of our ERC5 chamber family. I love how good you are with people, and you explain everything in a way that's digestible, because sometimes a lot of it can go over your head. This was a great conversation. I wish we had more time. We'll have to have you come back again. But in the meantime, for our listeners at home that might have some more questions, or maybe they have a family member or they themselves are looking to go out and buy a home, refinance, what is the best way for them to get in touch with you?
Yeah, I'd say probably our website. So www.townsendhomeloans.com would be the best place to reach us on.
All right. Sounds good. Drew, thank you so much for joining us today. It was such a pleasure and very informative.
Glad to be here. Thank you so much for the opportunity.
Thank you. And thank you for joining us for Conversations with the ERC5. If you would like to be the next guest here at Stonegate Studios in Wilbraham, go to our website, ERC5.com, and you can sign up to be the next guest.